So today I want to talk about the topic of life insurance here in Singapore. Specifically, I want to run you through 3 common considerations that most people will have when shopping for a life insurance. For those who don't know what the life insurance is for, it is basically an instrument that protects your paycheck in the event where you are unable to work as a result of an accident, critical illness, or premature death, right? Having a life insurance protects you and your family's assets and lifestyle, so you will not need to deplete your own savings or assets in the event where your paycheck stops. Okay. The first question that I often get is, how much coverage do you need to apply for? Now, applying for the right amount of coverage is similar to consuming the right amount of dosage of medication, right? Having too much is harmful to you, while having too little may not have any effects at all. The same can be said for applying for the right insurance coverage. For life insurance coverage, it typically covers you for 3 areas, right? Premature death, disability, and critical illness. Concerning the question of how much is enough, a general rule of thumb would be to apply for a coverage that covers for X number of years of your income plus all outstanding liabilities minus off all existing assets that you have, right? Liabilities include things like your home mortgage, your children's university education fees, etc. With regards to the use of existing assets, I prefer not to include them into your calculations, as we must take into consideration the use of these assets in an event of your eventual recovery, right? After all, we are not planning for a scenario where you have to start all over again with regards to your wealth accumulation process after you've recovered. For death and disability, the ideal coverage is heavily subjected to your age as well as your situation, but usually we are looking at about 10-20 years of your income, whereas for critical illness, I prefer to stick to the range of about 5 to 8 years of your annual income, right? The reason for doing 5 to 8 years of your annual income for critical illness is because that is the average duration a person with critical illness would usually take to either recover or, to move on, right? So there's really no need for you to get too much critical illness coverage unless you want to pay for it. But at the same time, you shouldn't get too little critical illness, right? Because it will not be useful to you when you need the coverage itself, right? Now, obviously, the theoretical coverage that you need to have may not be something that you would like to apply for due to budget constraints. You have to balance between the trade-offs and decide what you should prioritize on and how much you should apply for instead of blindly applying for the coverage that's recommended by theory, right? The second question that I often get is, should you get a term life insurance or should you get a whole life insurance? When it comes to the topic of term life and whole life insurance, the analogy that I like to use is the analogy of renting or owning a property, right? At the end of the day, be it renting or owning a property, if you intend to get a roof over your head, both method works, right? The difference, however, comes in terms of the financing as well as the ownership of the property itself. When you rent a property, of course the property is not yours. The moment you stop paying for it, the owner will kick you out. But in exchange for this arrangement, the short-term cost is of course cheaper than owning the property itself. On the other hand, if you own the property, the short-term cost is going to be more expensive, but the long-term cost is going to be cheaper, right? Furthermore, when you own the property itself has certain value when being exchanged in the market in the future, and that value that you're able to salvage will help offset your overall lifetime costs. Now, term life is essentially like renting the coverage, while whole life is essentially like owning the coverage. Depending on your unique circumstances and also the duration of which the coverage is needed, term life insurance is usually designed for shorter duration needs, like your property mortgage, whereas for whole life insurance, it is designed for longer duration needs, like protecting your income. Just as you wouldn't rent a property if you're visiting, say, Japan for 5 years, you wouldn't use or own a whole life property if the duration that you need is less than 20 years, right? Usually you will get a term life for that type of purpose. But on the other hand, if let's say you're staying in Singapore for the next 30 to 40 years, it doesn't make sense for you to rent the property, as the total rent that you would have paid over the years would amount to the total value of the property if you were to buy it in the first place, right? The same can be said for whole life insurances itself. Moving on, there's a lot of debate online over the issue of buy term invest the rest versus just buying a whole life insurance. So let me share with you my opinion and my stance on this. Look, I'm not a fan of buy term invest the rest, right? It seems good on theory, but in reality, it is extremely difficult to implement it. There is a list of consideration that you need to have, such as how do you invest to ensure that the returns you need can be achieved, right? What should you invest in to ensure that it will not affect other areas of your financial plan? What should you do in the event where you need more coverage after the term plan matures? Unfortunately, most consumers have no idea how to manage their investments, and they will often be better off buying a whole life plan for their long-term life insurance needs, right? As the margin for error for buy term invest the rest is simply too low for most consumers to handle. Now, the third question that I often get is, of course, should I get myself insured now or should I buy it later? With regards to the question of whether you should get your life insurance now or later, it is always better for you to purchase your insurance earlier, as number one, you are locking in your insurability based on your current health condition, right? Number two, you are locking in the costs, which will be lower today due to a lower age of entry as compared to if you were to purchase it at a later date, right? In terms of how much cheaper or how much more expensive it would be for you to get it now rather than later, generally for term insurance, the cost increase by about 6 to 7% a year, whereas for whole life insurance, the cost increase by approximately 2.5% per year, right? It doesn't make any economic sense for you to delay your purchase just to save a few years of premiums, as the total increment in cost will be more than the total premiums that you would have saved in the first place, right? All in all, those are the three key considerations that most of my clients had when it comes to their life insurance. At the end of the day, you should get yourself insured for the right amount and as soon as possible. With regards to the use of term life or whole life insurance, that really depends on your situation, your own comfort, and the level of risk that you want to take in terms of your overall insurance portfolio and financial planning. Also, always do your homework so that you can find the most suitable product at the best possible price, rather than running the risk of buying a non-competitive product, or even worse, a non-suitable invest or instrument class itself, right? So that's all I have for the video today. If you'd like to find out how you can benefit by working with an independent financial advisor and a certified financial planner, you can always reach out to me via my website. Do connect with me on the following social media platform to stay updated with future content, and you can always slide into my DMs anytime when you have any questions. I'll be happy to help. Now, all the links will be in the description below, and I hope to hear and connect with you soon.